Good morning, everyone. This is Brad Matheny. There have been a lot of questions I've been getting related to gold. And I wanted to talk to you guys a little bit about this type of move that happens in gold. So, when the markets start to really crash, you're going to see, or when there's some sort of a panic event. So, hypothetically, let me give you an example. We had COVID, which is what I'm looking at right now. We're going to look at the COVID example. Or we have, some sort of a massive event take place. Maybe the start of the war in Ukraine, or maybe some geopolitical event, something that causes the general markets to crash. You're going to end up getting a panic selling mode that's going to affect almost all assets. And when you get into this panic selling mode, even though assets like we're looking here, and remember I called the Anomaly event was going to happen about 2 weeks ago, 3 weeks ago, right before the election. And look at the selling we're seeing now. Selling across the market. Is this an anomaly event, or is this a panic selling mode? I'm not calling it a panic selling mode yet, simply because, and I'll point to this later. I'll actually point to it now, because this is gold, and we're seeing the crash index stay relatively elevated. Now, if the crash index were to really start to sell downward, then oops, then I would say, you know what? Yeah, we've got a pretty good capability to move downward, to move into a solid panic selling mode. What I believe is happening now, this is a daily chart. This is the 31st, right before the election. I think uncertainty and low liquidity set up a pre election selling in gold. This is daily. This is the day after the election when the markets rallied and gold sold off because the dollar rallied up extensively. Dollar's up again today. And we're seeing this selling because of dollar pressure and the fact that we're getting the Trump presidency expectation. We're not getting panic selling, but in a way, we're getting this anomaly pattern here. And we have to be cautious of the downward pressure in gold, meaning that what would likely happen, let me get rid of these so you can see. What would likely happen is that we're going to move down into some sort of a basing pattern, waffle around for 3 to 5 days. Very unlikely we get a deep V 1 day low, and then roll back up and then roll higher. That's typically what happens, is we get that kind of a solid rolling base and bottom formation like this. So we could move downward below this 2600, trying to refine support maybe in this 2520, 2560 area. I don't know. But until this pressure against metals stalls, we are going to move downward. That's what happens until the event, whatever the catalyst event that moved it takes place, ends. So in COVID, let's go back and take a look at COVID. We'll come back over here. Here's the COVID example. And again, we saw selling in my crash index. And again, the crash index symbol is this. That's the symbol. Highlight it, copy it, pause the video, write it down. This is a very simple crash index. We've got financials, transports, gold, and oil, energy and oil services. And so what we're looking at is a crush of those four sectors to move downward. We're not getting that right now. The SPY's up, the dollar's up. You can see this is why gold is under pressure, is because of this dollar. Okay, this dollar moves up, gold is under pressure. And the dollar's moving up because expectations of a stronger U.S. economy, a stronger U.S. dollar is putting pressure on gold. We need to see the dollar index really kind of top out and settle. And that's going to come, and then gold will re-hedge. Gold acts like a hedge against global risk. So if you take a look at the total capacity of the market, the amount of money that's actually flowing through the market, gold acts as a hedge against that risk. Now, when the markets are, so to say, under what I call training wheels, which is when the markets are being handled with silk gloves by the Fed, trying to spur everything along and trying to really operate within a contracting format where the Fed is trying to grow GDP and inflation, then you may see a scenario where gold contracts, because what happens is the risk of failure at that point is fairly nominal. Whereas the risk of failure when the Fed does not handling things with kid gloves and or raising rates and or central banks or hypothetically the debt markets are kind of taking control of risk factors on their own without Fed intervention, risk of failure becomes more elevated. Hopefully that makes sense. Think of it as training wheels. You're not really going to crash that much because you got the training wheels to keep you from toppling over. Whereas no training wheels, yeah, you can go as fast as you want, you can crash as hard as you want. That's kind of how it works. So now with this bottoming pattern in gold, the event that happened took place where there was a buildup, the market kept going up. We all knew that COVID was around back here in January. It started in back in October, November of 2019, and then it kind of grew and grew and grew. We all knew about it. And then all of a sudden, we had this rolling of news. If I remember right, we had news that it was spread into the U.S., and that we may have to shut things down. And then all of a sudden, we had the shutdown event, and here we were. This entire move just collapsed. This was really the first move, the 28th. This was the move down. And again, that was if I remember right, Friday, February 28th was the day that we had all of this reaction. Then gold came back up, reacted, tanked. It took about 4 or 5 days for gold to actually form a bottom and then rally back up out of it. Now, what happened in these 4 or 5 days is very, very important. We have to understand that the risk for COVID didn't go away. It perpetuated for, months, even well into, multiple years now. But what happened was the risk to the markets were reduced after this initial impulse reaction. And again, if I go forward and I look at other areas in gold, you can see big solid downtrend here, 14%. And remember, the COVID collapse was what, 12, actually a little lower, so 13, almost 14%. But look here, we have this big solid collapse while the crash index is moving higher. This is a downward trending in gold, a devaluation trending in gold in 2021 after we've reached the peak of the market. This was really a scenario where we were still in zero post COVID, zero interest rate. The markets had rallied against hedge. And now, what would be interesting here is take a look at how much, because Bitcoin acts as a hedge as well. And we will move this over here. So there's Bitcoin. So you can see the Bitcoin was moving up at the time. Regular, regular, and regular. So Bitcoin was moving up at the time while the economy was moving up, and we are likely to be seeing gold act as I don't want to call it a counter hedge, but as well, Bitcoin acts as a hedge instrument as well. So by watching this roll up, moving into this topping formation, and then rolling back into this topping formation, you can almost see inverted how Bitcoin moving higher, gold moving downward, Bitcoin rolling downward, gold moving upward. Now, what happened over here is we got this rolling crash right here. This is June, July 2021. The crash index starts to move downward. Gold starts to move downward in a bit of panic selling. It takes about 3 to 5 days. This is a daily chart for gold to mount some sort of recovery. And then we get that further crash mode down here, another 8 or so percent. We finally do get that day, 2, 3 day bottom, and then we rally back up to where we started, which is typically what happens. So again, as we're watching the crash index, that's why I showed it to you again. Back over here, here's the crash index symbol. It's what I call a custom index. It's just a bunch of symbols divided by 4. And again, use that to your heart's desire. And just remember that if we're in a downward mode in the crash index and gold is collapsing, particularly while Bitcoin is collapsing, then this is a pretty good area. Now let's come back over here. And Bitcoin was rising, but this is kind of the area here that I would expect a perfect setup. A deep bottoming formation took about 8-10 days, rallied back up to our above our high level, and then continued to rally higher, just like what happened after COVID. To me, that makes a lot of sense. The event ended, we based, we bottomed, we rolled. Now we'll come over here. Here's a number of downward trends here. As we have to wait for the rotation, the actual base to occur, you can see that we get that still 5 to 10 day base bottom. We rally. We get the same move here. We get the 5 to 10. Well, this is a deep bottom, setting up kind of a V, but then we retested back over here, retested these same lows. Now we get the move up to where we were to begin with, basically up into this area and then rally higher. That's the kind of move I'm expecting back over here. We get the selling, the crash index is moving down, Bitcoin is kind of sideways. We get that basing 3 to 5 day, actually went a little longer over here, 5 to 7 day basing. Then we rally up to where we started and rally higher. That's what I'm expecting to see happen back over here. Here's another example of a deep V. Notice that the crash index is generally moving downward. Bitcoin had been moving downward. We can see in kind of a downward trend here. We get the same basing, rally up to about where we started, and then roll and continue higher. That's what I'm expecting to take place back over here. If you were to ask me what's coming, Brad, I'm going to tell you right now that this is an event post-election. We just had the election. We just have a change in dynamics. We are seeking a base or a bottom. We are likely going to try to find that base or bottom down somewhere in this area. We might roll for 5 to 10 days. Then we should rally back up to about this level, and then we should rally higher. And that, ladies and gentlemen, is what you're waiting on in gold. So again, trying to buy into this selling right now is kind of foolish. We're not getting this crash index dropping. We're not getting Bitcoin dropping. What I do expect, though, ladies and gentlemen, if you're aware of my anomaly event, my anomaly event suggests that we're going to get some sort of a crisis mode that settles between now and call it December 10th, right in this area. So I can actually mark this kind of like this. We're going to get some sort of a crisis event that prompts the markets to move downward. Now the S&P and everything are just starting to roll right now. But again, what this would mean is that we could see some continued pressure into this area until we start to see some relief. And I think the relief comes right around this early December timeframe where we could see some upward movement. So my timeline for relief of this anomaly event is really more so around the end of November. I'll call it right here to right there. That's where I think you're going to get relief in this downtrend. I think you're going to get relief to the upside. The markets are going to move into a shifting upward trend here in this area. Until then, I think we're going to probably see quite a bit of consolidation. Now, that doesn't mean that gold can't roll back up to 2,700 or 2,680 or maybe even 2,720 again. Gold can, but it's going to can rally, but it's going to happen when we get relief in the dollar. And if we get that rolling downtrend, as I suggested, if we like we take a look at the Nasdaq right now, here's our rolling pattern. Here's our anomaly setup, and I'll try to show this to you so you guys can see it. But if my analysis is correct, we're going to get this rolling anomaly rolling all the way out here to roughly November. So here's November through December 10th, so about like that. We would get this anomaly event coming down, maybe a little deep, coming back into this area, and then rolling into a very late Santa rally. And I believe what that's likely going to do is that's likely going to get Bitcoin rolling downward back into the 70,000 area, maybe a little lower, rolling into support, because I think we've overreacted in Bitcoin. And the same thing with my crash index. I think the crash index will roll down into this 70 area and then roll back up into upward trending. So I really do believe this is likely to come. And I want everybody to understand that, where we're at with gold, because I'm getting a lot of questions. When's it going to bounce? How low do you think it's going to go? Well, at this point, I don't know. If we get into a panic selling mode, I mean, in reality, guys, gold could be down here in 25 again. And we're not that far away. We're $75 away. Back into this support level right across here. That could be a very strong support zone for gold. But where we're at with this is the strengthening dollar is putting pressure on gold, and we're moving into my anomaly event. If this plays out the way I expect, everybody needs to follow my general market trend. Remember, right over here, want to find it to show it to you. This is a 1 hour chart. Wait for everything to load. Remember, way back over here, I wrote at this area, traders should get to 85% cash and wait it out. Wait out the post election volatility. Don't be heavily invested in the markets before the election, because unless you're willing to take the lumps, the volatility is going to get excessive. Okay. I do believe we're still in a vortex rally. I believe, as I've told you, we're going to roll higher longer term. But right now, like I said, if my analysis is correct and we roll into the support zone, look at, guys, this is where I think we're going to roll down in this area, down in this area, down maybe into this area, base and bottom. So we're looking at a move down to 576 for the SPY, potentially from a high level up here at about 600. That is a 4.5 to 5.5% downward move. It'll be even bigger in the NASDAQ. Okay. So again, we could still be under very strong downward pressure in metals until this event settles. And I don't think we're going to come close to settling till probably the end of next week, maybe at the earliest. Okay, guys, I hope this helps. And remember, this is one of the reasons why I told everyone to get to cash and to wait this stuff out. Unless you're really prepared to take your lumps, and or I mean, if you're a skilled intraday trader, these are some pretty good moves. You can catch some really great moves here. And again, there's tools available. You can look at the resources that are out there. Check my profile. But again, I think if you want to and you really understand what's going on, this is a resettling of assets after an election. And now, what I'm going to warn you again is, if you followed my research and my morning videos, I think we're going to be looking at a moderate hard asset revaluation event between now and probably the second quarter of next year. And hard assets include gold and silver. They include housing, real estate, and again, a lot of basic materials: copper, tin, orange juice, you name it. Hard assets. These are commodities mostly, things you can tangibly touch. Okay, I'm going to leave it there. I got to go. We'll talk later. I've got a lot of work to do. Make sure you get some. And like I said, try not to chase these trends very heavily if you're not 100% sure. I mean, if you're a skilled day trader and you know what you're doing and you can contain your risk, this is a great time to be trading. Okay. But if you're really, unsure and don't know what's going on, these moves happen very quickly in a low liquidity market. And again, we're looking, I mean, look at how clean this is. We're looking at a deep downward move. So let me come, this is my side by side. So let me come in here to a 2 hour chart. And then let me get rid of this. Go away. Where is it? Get rid here and get rid here. So now look at how beautiful this chart is from a purely technical standpoint. Okay, we've come down, we flagged, we broke downward. We flagged a little bit, we broke downward. We flagged a little bit, we broke downward. Now what we're looking for, guys, is that low and the next flag, and then hopefully we can get a rebound and an excess phase peak pattern to actually roll to the upside. Okay. And that's ideally what we're looking for in the next phase here is where is that excess phase peak? Where is that base bottom rolling back to the upside, setting up our flag, setting up our rolling? And then what would happen is gold would rally up to here, consolidate, and then rally back out of it to new highs. That's what we're looking for the next phase of this. I've drawn it a bunch of times in here, trying to get you guys to see it, but that's what we're looking for is this next base bottom. We're looking for that flagging. We're looking for that inverted excess phase peak pattern and the recovery. And now, if I'm right, it's going to come somewhere out here, probably after November, well, in this area, somewhere out in this area. It's kind of where I think timeline, where I think it's going to be. It could be down here, could be where we're at right now. It more than likely will be right around this 2550 area. So more than likely be right around this area. Okay. I'm going to let you go. I hope this helps. But remember, when you hear me talk about it's basing or it's bottoming, you need to understand that basing means that it's moving downward like this, trying to find a base. So it could go downward further. You need to be aware of that. When I say it's topping, that means it's looking for a top. It's trying to come up here. It could go higher, trying to find the top up here. So basing and topping do not necessarily mean, hey, we found our bottom. It means it's looking for a base, wherever that is. So that's why we've got to be aware of the terminology that I use. When I say basing, like right now, gold is in a downtrend. It's clearly in a downtrend. We've seen these rotations, breakaways continually moving downward, which again is why I'm saying, you had this move down as an opportunity. You had this move down as an opportunity. All you need to do is learn the excess phase peak pattern. Now we're getting a little flagging right here. We might get another leg right down into here. But we are going to be looking for that base to set up. How do I know? It's fairly simple, guys. We can see the excess phase peak pattern here, kind of rolling into this consolidation. So we can see this flagging. And I'm going to just remove everything so you can see it. I'll draw all over. So we come up here, let's find our peak. There's our peak. Remember, I always try to start with a clear peak. Come down, we flag. We break down, we consolidate across this level. This does not constitute a breakdown yet. This breaks down from our flagging level. This then becomes our consolidation range. And this now is the move to the ultimate low. So this is our one as a peak. This is our two as flagging. Nope, nope, nope. R2 as flagging. This is R3 for breakdown. This is go away. R4 to try to break below our support. And I'll have to drag this down here. And now this is our 5 seeking the ultimate low. There's the excess phase peak pattern. It's a bullish pattern setting up. And we're now already in the phase 5 looking for that ultimate low, meaning the bottom is getting closer. We're just looking for it. And how that bottom will set up is very cleanly. We will set up an inverted downward move, moving up, moving into flagging. Then we will move up into consolidation and up into the ultimate high. That's how I expect this bottom to form. Until I see that kind of a rolling flagging formation, if we continue to make lower lows, we're just in a downtrend right now. Okay, so again, trying to teach you guys how to read this, and you have to remember that when we're in these downtrends, and we're seeking these ultimate lows and we're getting these big breakdowns, you don't want to be buying. I'm trying to tell you, it's please don't be buying into these big breakdowns. Now, eventually, when you get the base and you get a bit of an intraday rally, this is 2 hours. Yeah, you could buy this little move, okay, but you don't want to buy this big breakdown until we get some real confirmation. And you can potentially try to buy in here. You can potentially try to buy in the flag, because a flag means we're going up until we break down. Consolidation here means we might get little bitty upward moves here. This consolidation here in flagging can sometimes be very solid. This was a $70 move in gold. But when we get into this final breakdown phase, looking for that ultimate low, I mean, buying into a downtrend is pretty dangerous unless you really know what you're doing. Okay. And again, we're looking at this setting up an ultimate low here. It may be already set up. That's 2,600. It's a good psychological level. But my guess is this 2650, 2560, 2550 area is going to be probably pretty solid. Okay, guys, that's it for now. I'll talk to you later.